Imagine discovering the hidden forces propelling Bitcoin back from the brink, turning a brutal sell-off into a surprising surge. Could this be the start of something massive? Today, February 18th, 2026, Bitcoin is rallying above $70,000, defying the doubters after a heart-stopping drop. In this video, we'll uncover the real drivers behind this latest rally, backed by solid data from trusted sources. You'll learn secrets that could transform your investing strategy. For 100% true news and correct advice like this, like the video, subscribe to Joseph Markets and comment Joseph Markets below. It powers more fact-checked content just for you. By the end, you'll grasp why this rally is happening now and what might fuel it further. But let's dive in with the current picture. Bitcoin's latest rally in mid-February 2026, recovering from around $60,000 to above $70,000, appears driven primarily by cooler-than-expected U.S. inflation data, which has fueled hopes for Federal Reserve interest rate cuts sooner than anticipated. This recovery is supported by a broader rebound in risk assets, including technology stocks and precious metals, reflecting stabilized investor sentiment after a global market rout. Additional factors include whale accumulation, short squeezes, and signs of capitulation among weaker holders, potentially setting the stage for further stabilization. While the rally shows promise, evidence suggests it may be a relief bounce rather than the start of a sustained uptrend, given ongoing macroeconomic uncertainties and historical patterns. Investors should approach with caution as the cryptocurrency remains volatile and tied to broader market dynamics. Understanding the rally's context. Bitcoin's price has shown remarkable resilience in recent days, climbing back above $70,000 after dipping to multi-month lows. This movement highlights how interconnected crypto is with traditional finance, offering opportunities for those who time it right but also risks for the unprepared. Implications for investors. For U.S.-based investors, this rally underscores Bitcoin's sensitivity to economic indicators like inflation and interest rates. Diversification remains key, as while short-term gains are possible, long-term holding requires conviction amid potential pullbacks. Potential next moves. Indicators point to possible upside toward $75,000 if momentum holds, but a failure to break resistance could lead to retests of lower supports. Monitoring Fed signals will be crucial. The current market snapshot and immediate price action as of February 18, 2026, Bitcoin is trading firmly above $70,000, specifically around $70,200 to $70,500, marking a significant recovery from its low of approximately $60,000 earlier this month. This rally represents a gain of over 16% from that bottom, injecting fresh optimism into the crypto space. According to CoinDesk, Bitcoin has clawed back to above $70,000 on cooling inflation after an $8.7 billion wipeout. The broader crypto market cap has also rebounded, climbing back toward $2.5 trillion after shedding billions during the sell-off. To put this in perspective, Bitcoin's journey this month has been volatile. It started February trading near $90,000, but faced relentless pressure, culminating in a sharp drop to $60,017 on February 6th. Since then, the rally has been swift, with Bitcoin posting its largest daily gain since March 2023 on February 6th, surging over 11%. According to Reuters, Bitcoin climbed back above $70,000 on Friday after sinking to a 16-month low earlier, lifted by a sharp rebound in technology shares and precious metals. This isn't just a blip. It's a response to shifting market dynamics that we'll unpack. For everyday investors, this snapshot means opportunity amid uncertainty. If you're eyeing entry points, the rally's momentum, with daily volumes spiking to over $50 billion, suggests buyers are stepping in. But remember, Bitcoin's 24-hour change is up about 2 to 3%, while altcoins like Ethereum have gained 4 to 5%, showing a ripple effect. According to VanEck, the move has been driven by a rapid unwind of leverage rather than a single liquidation shock. Stay with me as we explore the inflation data that's supercharging this surge. It could be the key to your next move. Have you caught this rally in your portfolio? Share in the comments, and for more real-time insights, like, subscribe, and comment Joseph Markets. Cooler inflation data. Sparking rate cut. Hopes one of the biggest catalysts for Bitcoin's latest rally is the release of cooler-than-expected U.S. inflation data, which has reignited expectations for Federal Reserve interest rate cuts. The January Consumer Price Index, CPI, came in at 2.4% year-over-year, slightly below the forecasted 2.5%, providing a sigh of relief to markets battered by higher-for-longer rate fears. According to CoinDesk, the Consumer Price Index for January rose 2.4% year-over-year, just below the forecasted 2.5%. This data, released mid-February, shifted investor sentiment overnight, making risk assets like Bitcoin more appealing as lower rates typically boost speculative investments. Diving deeper, core inflation held steady at 2.5%, but the headline figure's miss was enough to tip the scales. Markets now price in a higher probability of a rate cut as early as March or May, with Fed funds futures showing over 60% odds for a 25 basis point reduction. This environment reduces the opportunity cost of holding non-yielding assets like Bitcoin, drawing in capital that might otherwise flow to bonds. According to The Motley Fool, the CPI print released at 8:30 a.m. ET was better than expected, with some measures below the anticipated 2.5%, leading to increased expectations for Federal Reserve interest rate cuts. Historically, Bitcoin has rallied 20 to 30% in the months following rate cut cycles, as seen in 2019 and 2023. Practically, this means Bitcoin's correlation with equities has strengthened, with the crypto moving in tandem with the S&P 500's 2% gain post-CPI. But it's not all smooth. Lingering inflation above the Fed's 2% target could cap the upside. Still, this data has been a game-changer, turning a sell-off into a rally. According to Reuters, the rebound comes as investors react to a cooler-than-expected U.S. inflation print and signs of renewed risk appetite. Next, we'll see how this ties into the broader risk asset rebound. Don't miss it, as it reveals hidden market connections. Rebound in risk assets and tech sector momentum. Bitcoin's surge isn't happening in isolation. It's riding a wave of rebounding risk assets, particularly in the technology sector and precious metals. Following a global market rout, tech stocks like Nvidia and other chipmakers led a sharp recovery, pushing the Dow Jones above 50,000 and the S&P 500 higher. This enthusiasm stems from renewed AI optimism, which spilled over to crypto, as Bitcoin often trades as a risk-on asset. According to Reuters, Bitcoin climbed back above $70,000, lifted by a sharp rebound in technology shares and precious metals following a global rout that had hammered a broad swathe of risk assets. Precious metals also joined the party, with silver up 8.8% and gold rising about 4%, signaling a shift from risk-off to stabilization. In detail, the tech rebound was fueled by lower bond yields dropping 5 basis points, making speculative assets more attractive under discounted cash flow models. Bitcoin, down nearly 50% from its October 2025 peak of $126,000, became a prime target for capital reallocation. According to The Motley Fool, lower longer-duration bond yields, down by around 5 basis points, sparked a broad rally among speculative assets due to reduced fixed yields. This dynamic has historical precedent. During the 2020 recovery, Bitcoin gained 50% as tech surged post-pandemic lows. For investors, this means watching correlations. Bitcoin's beta to the Nasdaq is around 1.2, amplifying moves. But caution, if AI hype fades, crypto could falter. According to VanEck, weakness in the AI trade impacted crypto, particularly miners selling Bitcoin to support balance sheets amid tightened financing. This rebound is a key driver, but whale activity is amplifying it. Stick around to learn how big players are shaping the market. If this rally excites you, hit like and subscribe to Joseph Markets for more, and comment Joseph Markets for fact-based finance. Whale accumulation, providing support. Large Bitcoin holders, or whales, have stepped in aggressively, accumulating roughly 53,000 BTC in the past week, helping stabilize prices after the sharp drawdown. This buying spree, concentrated around the $60,000, $65,000 levels, signals conviction from big players who view the dip as a buying opportunity. According to Equity, whale wallets added roughly 53,000 Bitcoin in the past week, with buying helping stabilize prices after a sharp drawdown. Whales now control over 20% of circulating supply, up from 18% last year, per on-chain data. Breaking it down, this accumulation coincided with $8.7 billion in realized losses, described as a textbook capitulation event, where weaker hands sell to stronger ones. According to CoinDesk, $8.7 billion in realized Bitcoin losses in the last week, potentially shifting supply to stronger hands. Historically, such rotations precede stabilization, as seen in the 2022 bear market bottom. Miners have also reduced selling, with Bitcoin trading above production costs for many. What this means for you: whale support creates a floor, but retail caution persists. If inflows continue, $75,000 could be next. According to MLQ AI, Bitcoin's February price target draws 51% backing for $75,000, with 63.0 miners in cumulative trading volume. But this isn't the only technical factor. Let's explore the charts driving the rally. Technical recovery and short squeezes. From a technical standpoint, Bitcoin's rally is bolstered by oversold conditions and short squeezes. The Relative Strength Index, RSI, dipped below 21 on futures charts during the sell-off, an extreme oversold level that historically signals rebounds. According to VanEck, RSI on Bitcoin futures fell below 21, an oversold level. This led to short liquidations totaling $2.5 billion in Bitcoin futures, forcing sellers to buy back, amplifying the upmove. Chart patterns show Bitcoin breaking above key resistance at $68,000, with volume confirming the bounce. The 50-day moving average, previously broken, is now being retested as support. According to Seeking Alpha, Bitcoin has made 3 attempts to gain acceptance above the $70,000 handle since February 5th. Funding rates turned negative briefly, indicating exhaustion among bears. Practically, this technical setup suggests mean reversion, with potential targets at $75,000 if $71,000 holds. But volatility remains low at 38, half of bear market peaks. According to VanEck, 90-day realized volatility at 38, half of 2022 bear market levels. ETF flows are turning the tide too. Hang on for that. Shifting ETF flows and institutional interest. After months of outflows, Bitcoin ETFs are showing signs of stabilization, with net outflows slowing to $410 million recently, but inflows resuming post-CPI. From X post by Oscar Laura, Bitcoin ETFs see $410 million net outflows, but cooler inflation sparks relief rally. Institutions like Abu Dhabi Wealth Funds hold over $1 billion, signaling long-term commitment. In depth, total ETF holdings stand at billions despite the crash, with rotation from weak to conviction investors. According to CoinDesk, Bitcoin treasury firms holding over $21 billion in unrealized losses reduced to $16.9 billion post-recovery. This shift could fuel sustained buying if rates fall. For U.S. investors, this means ETFs are a gateway, but watch for $6 billion outflows reversal. According to Bloomberg, since October 10, roughly $8.5 billion has flowed out of U.S.-listed spot Bitcoin ETFs. Macro outlook is next. It's crucial. Broader macroeconomic tailwinds. Macro factors are aligning favorably, with lower anticipated discount rates making Bitcoin shine. Bond yields dropping post-CPI reduce pressure on risk assets. According to The Motley Fool, lower anticipated discount rates from lower bond yields sparked the rally. Global money supply growth supports hard money narratives. Details: Fed's potential hawkish shift under nominees like Kevin Warsh had pressured prices, but CPI eased fears. According to Reuters, Trump's selection of Kevin Warsh fueled the rout, but rebound followed. Correlation with S&P 500 at 93%. Implications: if macro stays supportive, rally continues. Else, downside to 50K, 60K. According to Seeking Alpha, a confirmed bearish symmetrical triangle suggests $60,000. Market sentiment and psychological boost sentiment has shifted from extreme fear and greed index at 10, to neutral, boosting the rally. According to CoinDesk, the crypto fear and greed index remained in extreme fear. Capitulation metrics show supply rotation. Psychologically, the rally counters doubts about Bitcoin's utility. According to CNBC, growing doubts about Bitcoin's practical utility. Prediction markets favor 75K. According to MLQ.ai, 51% backing for $75,000. Future outlook and potential catalysts: short term, 75K, 85K if momentum holds. Long term, 100K, 150K by year end. According to CoinDCX, Bitcoin could attempt $100,000, $105,000 by end of February. Watch Fed Geopolitics. There you have it. The drivers behind Bitcoin's latest rally, from inflation relief to whale power. For more, subscribe to Joseph Markets and comment Joseph Markets.